Hello, good morning. My name is Juan Rodriguez Cogolos. I'm in charge of communications at impassivewealth.com. One of our few videos in English, but I wanted to take the opportunity. I had an informal meeting a couple of weeks back with very young people at the place where I work. So after work, we went out to the pub and had a chat about finance. So I want to share some of what was discussed at the meeting and give a few ideas on how investment platforms work and so on. So we started talking about the basics. I'm going to take advantage of an excellent summary from one of the members of the group. Thank you very much, Ben. I'm going to read through because the summary is just excellent. We started talking about, your personal money, the basics, how you should handle your finances. Okay, so we, in a nutshell, talking about debt. Get out of debt if you have any debt. Well, don't get into debt in the first place. I'm talking about consumer credit, credit cards, instruments that have an atrocious, rate of interest in the 20% plus, store cards, that sort of thing. If you have a credit card, pay it every month. So don't get into debt if you can, or if you are in debt, start by, killing it. It plays against you. Compound interest is earning interest on something and then earning interest on something plus the interest you already earned. So your money goes up like a rocket. With debt, your money goes down like a rocket. You pay more interest every time. So just avoid it. Just avoid it. In case of emergency, by all means, but avoid it. And there are exceptions to this rule, like mortgages. If you want to buy your place, of course, most people would need a mortgage. Student loans. This video is focused on the UK. Where I live, where this meeting took place in beautiful Warwick. Student debt is special. They cannot knock on your door and say, pay me back tomorrow. It's a bit more like a tax, more than a debt. So, don't worry, pay whatever you need to pay. And it's a very special type of debt. Excuse me, I had a cold. That's why this video is so late. In terms of spending, do you need to buy a new car? Do you need to splash in, my son deserves this, I deserve it? Well, it's not a question of deserving. These days, people have a sense of entitlement. It's a question of, can I afford it? And for instance, a new car, anything that I would like to drive at 25 is going to be, 20-something thousand maybe. Buy a humble second-hand car. And, if you can afford it in the future, treat yourself. But, car is a car at the end of the day. So another important point, have a safety net. You need some money saved in case of car breakdown, new microwave, the washing machine went pop, and you need a safety net for other events like redundancy and illness maybe. Recommendation is a ballpark figure, depends on your circumstances and depends on your levels of comfort. 6 to 12 months of your salary. Then, excuse me again, there's no point saving if you don't invest your money, because inflation is into your savings. Your buying power erodes. So once you have your safety cushion, it makes sense to invest. So a few ideas on investing. I will do a practical demo in a minute, just to illustrate some of the concepts and land these abstract ideas. Stocks and shares, you need to give yourself a 10-year term. And you should be, you should invest for the long run. It's not point if you're going to need the money in 2 years, just don't get into stocks and shares. Tracking indexes is a good idea. They are cheap. 80% of trackers trackers are like investment funds or ETFs that simply track the market. Whatever the market gives, an index, the FTSE 250, the S&P 500, you just accept the returns given by the market. That's the idea. But they are very cheap. They are very cheap. Look at the costs in everything you invest in. Look at the costs. Fees, again, eat into your returns. Now, it's very important to do a proper asset allocation. That depends a lot on the amount you have to invest. But, divide your money. We're going to see that in a minute. Divide your money into different geographies: North America, Europe with UK, emerging markets, Pacific region, and some uncorrelated assets like gold or REITs. REITs, REIT, real estate investment asset. They are linked to property. You don't need to buy a house to invest in property. You can invest in these REITs, or you can invest in companies that are in the building industry. So, and you can do that for, one grand instead of 300 grand. Rebalancing, we are not going to see that today, but rebalancing is basically having percentages allocated to each asset. Those percentages will be changed by the market, and so rebalancing is once a year, sell and buy, so those percentages are put to their original thing. In a simple example, if you have a 50-50 allocation, after a year, markets go up and down. Maybe asset number one has 55%, and asset number two has 45%. Well, sell enough of the 55 to buy on the 45, so they are 50-50 again. That's the rebalancing. Once a year, you can do 6 months, but once a year is just enough. That allows you to sell what goes up and buy what goes down. So it's a powerful tool. Again, management fees stack up. So 0.2% difference makes a lot of difference. Let me show a couple of tools for this video. Is getting a bit long already. I might do a second video for the demo I was planning. So you have, this is our website. Most of it is in Spanish. So, well, if you speak Spanish, that's fine. The Spanish-speaking people, if you speak English, you can still see this video. Okay, so this is our website. We have an investment fund in Spain, but you can invest from the UK, but you would be outside you would lose the advantages of the tax-saving instruments. So not really a recommendation. If you wanted to save in euros because you want to retire to a Euroland country, maybe get in touch if you want to do that. But in principle, for UK investors, is not a very good option. For your short-term money, that cushion, you could use things like SOPA. SOPA is like a peer-to-peer loan system. I've been using it. It's good. You need to read the small print. You don't have the FCA warranties like in a bank account. That cushion of 6 to 12 months we talked about, you should save in liquid assets. It's not good that you have an account that 3 years you can recover your money after 3 years if you know your car is not going to break down on the 3rd year. So you need to have this cushion either in a current account. Inflation will eat a little bit, but inflation is not huge this time. SOPA could be a good way. The loans are 1 year, 2 years, 3 years, but you can sell them in the SOPA internal market. I don't know. I just thought it was useful to mention these alternative ways of saving. Again, I'm not making any recommendations. Remember that, or any. This is not advice. This is not financial advice. This is just a friendly video, from your mate. So no recommendation whatsoever. I'm just telling you what's in the UK market. Hargreaves Lansdown is it's a very good investment platform. I was with them for a long time. It's just a bit too expensive, in my humble view, but it works very well. So you're comfortable with paying a little bit more, in the order of 0.1% a year. Then that's okay. I would rather not pay it, but so I switched to Charles Stanley. I promised in the meeting I would do an appraisal of the different options in the UK, but I was ill and I didn't have the time. So Charles Stanley is the one I am with. I will do a little demo in our next video in English, so you know what to expect. It has improved a lot, but they hiked the fees a little bit, so it's now closer to what it was with Hargreaves Lansdown. Hargreaves Lansdown has more tools, more research, more useful information on investing. But Charles Stanley is cheaper, and they have improved the interface of their website massively. So it's now a lot easier to use. You will see in the next video. The next video is a little demo of an example close to me in my family of somebody saving and saving periodically. So you can see how investing every month looks like. This video is already a bit too long, and I don't want to mix both things. So on the next one, you will get that. Thank you very much for your time. Please, you help us a lot by subscribing to the YouTube channel. We want to reach a lot more, subscribers there. That will help us, develop things and do new things. So you will have the logo of Impassive Wealth, in the low portion of the video. Click there and you can easily subscribe, or just go to YouTube and subscribe. Hit the little bell so you get notifications of every video. Most videos are in Spanish, but just ignore them if you are not a Spanish speaker. But I want to publish a lot more in English, and you don't want to miss any videos, just do that for me, please. Thank you very much. See you soon.